Evergrande, sign of global stock market crash? Evergrande, a Chinese real estate and infrastructure company, is facing the possibility of bankruptcy. The financial institution has been struggling to make payments on an $800 million bond that's due in 2020. This could be the sign of a global stock market crash. Evergrande's struggles are reminiscent of those faced by Fannie Mae and Freddie Mac during 2007 to 2008, when they had to be bailed out by the US taxpayers for $187 billion to prevent them from collapsing into insolvency and causing a worldwide economic meltdown. Let's find out why Evergrande's trouble is a sign of a new crisis on the horizon. What is Evergrande? Evergrande, or Hengda in Chinese, is a real estate and an infrastructure company that was established in 2010. It was founded by billionaire Xu Xian, who now serves as the chairman of Evergrande Group. The company's headquarters are located in southern China, Guangdong province. Evergrande has been involved in a lot of projects, including the building of the first bridge over China's cross-water channel and high rainfall, a typhoon-proof dam on Liuxi River. In 2017, Evergrande became one of the first companies to sell infrastructure bonds in Hong Kong. The company managed to raise more than $2 billion from doing so. What does Evergrande do? Evergrande is involved in a wide variety of businesses, which includes real estate, construction and infrastructure projects, healthcare and pharmaceuticals, and more. One of the company's most important projects in the development of coastal tourism resorts that are meant to increase the country's capacity for urbanization and alleviate housing shortages. Evergrande is also involved in construction and development, including the building of high-end housing. Evergrande has been facing financial hardship and struggling to make payments on their $800 million bond that's due in 2020 since 2014, which was when China first announced that it would be slowing down its economy. The company's chairman, Xu Xian, is now facing the problem of how to deal with Evergrande's upcoming payment. If he cannot come up with a way for them to be paid, Evergrande Group could go bankrupt in 2020. The rise and fall of Evergrande. Evergrande enjoyed an initial public offering of its shares on Hong Kong Stock Exchange in November 2010. The company was initially successful, with its stock price peaking at $7.28 on August 11, 2011. This tremendous success came to a halt when China announced that it would be slowing down its economy and more tightly controlling the money supply. Evergrande has been struggling ever since to pay back the $800 million bonds that are due in 2020. The company's chairman, Xu Xian, is now faced with the reality of whether or not he will be able to come up with a way for them to repay it. Evergrande's ability to do so relies on the country's economy and infrastructure projects. If Evergrande cannot repay their debt, it will be a sign of bad things to come for the global financial market, similar to what happened with Freddie Mac and Fannie Mae in 2007 to 2008. The company has $200 billion in debt, which is more than the GDP of many nations. One of the Evergrande's biggest problems is that they have $200 billion in debt and only $9 billion in cash. The company has been seeking to raise funds through a series of deals or restructuring. This could mean that the company is preparing itself for bankruptcy and restructuring its debt, similar to what happened with Fannie Mae and Freddie Mac in the United States during 2007 to 2008, when they had to be bailed out by the US taxpayers for $187 billion to prevent them from collapsing into insolvency and causing a worldwide economic meltdown. Evergrande's financial distress is a sign that global markets could soon face another crisis, similar to what happened 10 years ago with the last financial crisis. As of now, there are no signs that this company will be able to pay back its debt. Evergrande is also facing the problem of whether or not it will be able to repay its $800 million debt that is due in 2020. The company has lost 70% of its value since 2011 and only has $9 billion in cash, which is less than what they owe. Since the company was unable to make their last two payments of $64 million, it is clear that they do not have the money to pay this upcoming lump sum of $800 million. Evergrande's ability to repay its debt relies on how well China's economy is doing and its infrastructure projects. What's that mean to the global stock market? If Evergrande is unable to repay its bond, it could be a sign of bad things to come for the global stock market. So Evergrande's financial troubles are worrying and indicate that another crisis like 2007 to 2008 could be approaching. Although Evergrande is an extreme case, it shows how over-indebtedness in China may cause a bigger problem for the global financial market. If the company is unable to pay its debt, it could start a chain reaction that would plunge world markets into a crisis similar to 2007-2008. Investors should keep an eye on Evergrande's upcoming payments and where China's economic trajectory goes from here before deciding if they should buy stocks or not. What's that tell to the investors? Evergrande's financial distress is a sign that global stock markets could soon face another crisis similar to what happened 10 years ago with the last financial crisis. So, as an investor, you have to keep an eye on Evergrande's upcoming payment and whether or not China's economy can follow through on what they are promising people. If it crumbles again, you should expect that another world stock market crisis similar to 2007 to 2008. Conclusion: Evergrande used to be a company that was admired throughout the world for its ability to expand and grow. However, China's increasing debt levels have caused problems for many companies, including Evergrande. As you can see how it can affect the entire global financial market, you should keep an eye on Evergrande's upcoming payment and how China deals with its skyrocketing debt. If it goes the way about the last financial crisis when Fannie made $187 billion in bailout and Freddie Mac $187 billion in bailout collapsed, you have to expect another world stock market crisis similar to 2007 to 2008.